Good morning, everybody. Welcome into another pre-market live stream here with the Everyday Growth Advisors. I hope you guys are having a good morning. Just a quick thumbs up if you can hear my voice. Make sure that my mic is working. Once again, another week of OPEX here where we have about $1.7 trillion in notional volume and an additional $4.4 trillion in additional non-expiries, which will also be expiring today. So a total of $2.1 trillion, which will be expiring today. And I also put a quick little vote on the chat so that you guys can kind of vote on whether you think the market's going to go up and down, up or down today. That's a good way to also keep your bias in check. Usually in my 10 years of experience trading, I always feel when the consensus is swinging one way, we should always be fearful and try to be non-objective and then, you know, reevaluate our bias. So confirmation bias is a very important thing. Don't get wrecked by it. And we'll see how the votes do by the mid of the session. Welcome in, guys, from, the interwebs. We're going to go through the macro situation first right now and then cover the technicals on both SPX and NASDAQ, IWM, VIX, bond market, dollar index. We'll do them all and kind of get everything done ahead of pre-market here. So let's get this on the road and peel this onion. All right, so let's talk about macro a little bit. And I think that the elephant in the room that we got to address is the Fed yesterday, what was his name, Bullard, kind of taking a very, very hawkish stance in terms of addressing the issues surrounding monetary policy. And we have obviously no surprise here that the Fed is taking a very calm defect in tackling the situation. We've seen the Fed do this increasingly more hawkishly in recent months, where they don't want the market to get ahead of itself and price in a premature recovery. Now, the Fed does know that there is a very low chance of a soft landing. I'm sorry. So a hard landing is very, very pretty much on the books, and I've already mentioned it multiple times on this live stream that we're expecting the market to go through a deep recession next year. If it's not deep, it's going to be at least for 1 to 2 quarters, and then we might come out of it depending on how much of supply and demand shocks have been residing after COVID. So that's kind of still on the table, and from the macro perspective, we don't see anything improving from the rates perspective. However, this past week has been interesting because we saw the bond market start to react in the opposite direction of what we thought. The bond market started to buy up ahead here, which is signaling that the Fed might pause. Now, I always like to say on this live stream, and I've always said it because you need to always remember, when the bond market makes a decision or is trying to sniff out something, it will react, and it will be very, very in your face about it. So you always have to watch bonds because they are the liquidity and plumbing of equities. And literally, the amount of treasuries that are bought or sold contributes to the money supply that is in the system. So you have to look at the bond market very effectively and be able to understand what the buying pressure or selling pressure of bonds means. And obviously, there are two ETFs that you primarily want to pay attention to. One is TLT, which is the right side of the bond market curve, which is the bigger or longer term expiries of the treasuries, which are 20 plus year to 30 year. And then you have TLH, which is 10 to 20 year, which is the middle part of the curve. So both of these have been bought up pretty significantly, and we're seeing a little bit of a reprieve on this side of the bond market. That means that the bond market is sniffing out the possibility that the Fed might slow down its pace of hike, or it might stop altogether, which in my opinion is very against what the Fed has said that they will do. So the bond market is calling the Fed's bluff here. Now, we've spoken many times about this before. The Fed can't really have the inflation effects go away until unemployment starts to rise. And that number has to be around 4% for unemployment before we see changes in any sort of monetary policy. So these are all things that you have to keep at the back of your head when you're dealing with the macro. And, I'll keep repeating this as and when we need to remind us, because these are just good reminders to have as you get into your trading day, to make sure that you don't compromise your biasness and then, get yourself into over bullishness or over bearishness. So let's jump into a little bit of the technicals here. Turning back to SPX. The start of this week, we were looking for two scenarios. The first, for us to come back down to 3,900, which is kind of what we did yesterday, a bounce and then to move to the upside into 4,150. But it seems like this week we've had very, very little movement and almost sideways crawling in OPEX. And then yesterday we had a little bit of a downward move, but then got bought up very quickly after the market opened. Because there was a lot of dealer exposure that was betting to the upside. Not to mention, there was a very, very interesting, suspicious bet right at the market open, $1.1 million of zero-day expiries. Yes, that is right, guys. There was a lot of, institutional betting on these degenerate kind of contracts now. And don't forget, once upon a time, it was just Wall Street bets playing these contracts, and now institutions are in the game because they see that there is money to be squeezed out of that, financial security. So that's another a topic for another day, and I may choose to discuss this topic on Monday during Monday's live stream. So tune in for that when we do discuss that, because it's also a very important part of the market that I have been talking to some other traders about. And how do you actually capitalize from that? That's something that we are looking at now, and we should obviously develop strategies to tackle those things as well. So with SPX right now, where we are is exactly where we started the week, and that's very unhelpful because we don't know exactly what the market's planning to do heading into the end of the session. But yesterday's close was quite bullish as we got above 39.50 again. I think a retest of 4,000 is going to be in play here, obviously, which has been the past resistance, and then a break above that and a rally which sustains above 40 or so. We'll see the 41.50 that we've been looking for a while. So remaining non-biased here, we have to play that to whichever way it goes. Now, obviously, the rejection of 4,000 here will see us go back and retest this 39.11, and then we're going to see a range. That will keep us range bound for a while, and I don't think that this is a likely scenario. It's just I think that there's a lot of contracts that have been rolled out, and so dealer exposure is kind of readjusting into the end of this week. Kind of a different situation on NASDAQ. As you can see, the downtrend has kind of reversed here. We are still pivoting or attempting to pivot out of this bearishness. Yesterday we had that pivot to the downside, and then we got bought up very, very strongly out of this. And now we're looking to kind of base around this area for the next extension here. Possibly, trying to retest this $12,100 level or $12,090 level. And then after that, we have $12,500 on the table. Which is the next key level to the upside. Of course, if we start rejecting somewhere up at the $12,000 level, then that brings us down once again, and yada yada. We get the range once again, and we can discuss this on Monday again before the pre-market stream and see where we're at. So today, the focus should be to watch for rejections either here or play the upside up into 4,000 on S&P 500, which will energize NASDAQ up to around the $12,000 level. So that should be your game plan today. If we really do get bullish. The way that I look at it, I think we're going to remain choppy, and that's just the way the week is going to close. Looking at small mid caps here, IWM, which is the Russell 2000 ETF. We came down pretty significantly yesterday and then got bought up, but we're still trying to test the bottom of this channel. So I think even though we've come back up here at 184.37, if we get a nice rejection, we could easily come back down into the 180 once again for this retest before we ultimately get bullish again. So there's a lot of uncertainty at this moment in terms of price action, and we just have to play pivot by pivot. We don't need to try and guess up or down. The VIX, on the other hand, rejected very cleanly off this trend line, and looks like we want to go further down. So $21.20, $21 roughly is the next level that we want to be looking at for the VIX, and so far pre-market we're down about 1.7%. So it's looking good so far for bulls, right? But remember, anything can change during market hours. Not to mention dollar index kind of just forming a bear flag here in the short term. We're looking at kind of a big move down and then consolidation here. This could be continued move down, or it could be a pullback. So we have to kind of keep an eye on the dollar index as well. Remember, why is the dollar index important? It reduces the buying power or the consumer buying power for any U.S. denominated assets, and since equities are priced in U.S. dollars, if the dollar goes up, it erodes your buying power. So that's bad for equities usually, and traders usually trade around that kind of price action. Okay, so we covered all the bases here in terms of market indicators. Now let's get into some of the tickers that you guys have over here so that I can get them done. BABA, really beautiful move. Yesterday we played this on the Discord. We made about, I want to say 40% on half of the position and 30% on the other. Closed out, was a nice one, I believe. Something like let me see here. Yeah, total to about $4,000 or so. It was not a bad trade. Now, BABA wants to definitely consolidate over here. I think a pullback to $80 is very essential for it to continue to the upside. And I want to pull back in all across the Chinese sector because they have been rallying very hot this entire week. So similar situation here. We want to pull back to $80 before we start getting bullish again. Even if we can get to 75, that'll be pretty cool. So I'll be watching BABA for the downside, but I will not trade the downside here because it's too risky. And not to mention the risk-to-reward ratio here presents no opportunity much to the downside here. At most, you're looking for a 50-50 flip, so I don't want to trade this where it's at. I either play the breakout to the upside when it does bounce, or I'll just wait for the pullback and then reassess where it is. So BABA's not tradable right now, in my opinion. You got to just hang back and let the trade come to you. Ignore this one for the time being. AMD, let's have a look at that one. Similar looking to NVIDIA. So anybody who asked for NVIDIA and AMD, these are both going to be killing two birds with one stone. With AMD, you have a rejection at the 50% fib from this entire wave here. We got perfectly rejected the 50, and now we have to look for rejections below the 38. If we continue to hold above the 38, then we're going to retest the 50 and then eventually get up to the 61.8, which is at 85. And that's the same situation for the SMH, which is the semiconductor index. And that move would be up to 245. So very similar moves on AMD and NVIDIA. That's what you have to know there. My opinion is wait for the pullback and wait for OPEX to be over before you make any rash decisions relating to AMD or NVIDIA, because the Nasdaq's going to move with volatility, and you don't want to be caught in that mess. Once again, guys, I wanted to take a second out of my day to thank you guys for attending the live stream. And once again, if you are here and you're enjoying this, make sure that you take the time to smash the like button. I truly appreciate you guys. Oh, sorry, clicked on the wrong one and the music started playing. Yeah, so if you could smash the like button and subscribe if you haven't yet, and you know, that means the world to me. I appreciate you guys being here once again. Okay, so moving on here. Next, LLY, so that's Eli Lilly, that's healthcare. Healthcare has been, it was bullish for a while, and now I believe, let me check here, XLV. Yeah, it has been bullish, and we are trying to consolidate here. Honestly, if we break out in healthcare, then Eli Lilly could see upside. Right now, it has broken out, but I think what you really want to wait for is a break above 370 for that price discovery. And then just going off the previous wave, that will bring you a lot of extensions to the upside here. So, you know, that first extension is going to be at 387.59 for that fib extension for the 23.6. Right now, if it rejected 370, likely to come down to 352 before you see a bounce. So until and unless you break above 370 right here, I think you want to wait a little bit before engaging with Eli Lilly here. So I would say wait and then engage above 370. That gives you a nice risk to reward ratio to the upside. And if you reject at 370, then the play to the downside is not as great. So I wouldn't play the play to the downside. Okay, yeah, that's Eli Lilly for you. Etsy. Okay, there's a lot of tickers from you guys today, so I'll try to get to all of them. Okay, so Etsy, very bullish. I don't like moves like this typically. After you see a huge move like this, pullback is always essential, and then after this usually comes a period of consolidation. That's just my experience with you know, these kinds of moves. When something goes parabolic like this, and I think it was due to earnings, you know, you gotta wait for that consolidation to happen and let this digest. It is forming a megaphone kind of pattern, I would say. As you can see, like, you know, kind of like that and like that, and you know, honestly, if it gets ugly, it could really come down further to the 38.2. So I would say the downside here is more warranted than the upside for the time being. But as I said, I'm expecting more of a sideways movement here before anything else. So that's where you have to keep your head with Etsy. Just from the chart itself, I think a move to the upside would be quite surprising. If we get to 123 very, very quickly again, then that would mean that it's going to go for the extension at 136. So that's how I would play this. I'll play the downside first at 109, 110, or 100, and then after that, wait for the bounce confirmation, then play the upside. That's what I would do here. Chewy. Okay. Oh, this is nice. This is actually nice. This is decent. This is a good, looks like a nice bullish opportunity. This would be the level. So this range right here, $40 to $42. You want to bounce in that zone where we are right now, pretty much. Chewy needs to bounce here to continue to the upside. So I think that it's trying to break out into an uptrend where it could retest 52, but it needs to continue with conviction to the upside. So I think it's kind of you know, still trying to make its way there. Yeah, hold 40 to 42 and bounce strongly. Then you can take the upside at least 45 first. And then after that, 50. And you can cut somewhere around 48, 49. You don't want to cut at 50, so that's where I would play this. And if the pullback, I don't want to play the pullback because there's a lot of booby traps in this area. You can see price action's pretty much all solid through here in this area. So yeah, keep your eyes on that specific area. 40 to 42 for a bounce to the upside on Chewy. Tesla, okay. Tesla's still to the downside. We're still holding that bearish position. And you know, we still have bearish position on Tesla because the technicals have not changed here. Yesterday's buy up did not give us a break of trend, and so because of that, we don't want to you know, prematurely get out of this swing trade by just a little bit of price action. Don't let that happen to you, because if you do let that happen to you, then what happens is you change your bias and then it moves against you, just like how a lot of people would have gone Tesla bullish yesterday, and the volatility is going to slam you down. So we have long expiries still playing the downside. 177 first target, break below 177, and then a retest of 177 is going to allow me to reassess my position and take further downside or play the bounce. Either way, so 177 is the target for now on Tesla. That's what I'm getting at. Apple, okay. Apple's interesting, but honestly, I don't like this price action on Apple, and so do I on Microsoft. They both have been trading really weirdly, and you know, this price action on Apple is very choppy. Honestly, I'm gonna be really honest and tell you guys, avoid Apple and Microsoft for the next 1 to 2 weeks. For that matter, avoid all the mega caps. Amazon is a little different. It's a consumer discretionary sector which has been bearish secularly. So Amazon to $86 has been a nice little opportunity because it has a gap fill as well. I'm waiting for the break below 94 for us to play this to the downside. So yeah, this is something that I'm looking at. But Apple and Microsoft, I don't want to touch it for now. Just look at the choppiness in this chart. If anything, you know, it's gonna just follow SPX. So that's the rule you're gonna use with this. A break above 154, you see the upside to 157.50, and that's not a really nice upside neither. So the upside risk to reward ratio sucks. And then if you see the downside here, the risk you're taking on is to 146 or 147, not a nice downside neither. So you understand what I'm saying here, Natasha. That's the reason why I wouldn't want to play this one. Can somebody please ban or whatever that guy who's trying to okay, let me see. This person's trying to promote something about girls. Come on, man, we ain't interested in girls here. We're geeks. We only like stocks, okay? Can I make somebody a mod who can take care of things like that for me? Who wants to volunteer for future live streams? Anyway, going back to what I was saying about Apple, that's my opinion. I don't like this risk structure here, so I wouldn't play the upside or downside, unfortunately. I'll just wait. Yep, so that's all for now. And that's all I have for you guys. I hope that you guys, you know, have a good trading day. We'll be back on Monday once again doing this. And yeah. Peace out, guys. I mean, I don't see any more. Oh, wait. Hold on. Someone said Ford. Okay, let me do Ford. Okay, Natasha, I'll make you a mod, and then you can take care of that for me next time someone does that. Hold on. Let me make Natasha a mod. Add moderator. There we go. Okay, cool. Thank you for volunteering. I appreciate it. Okay, so the last one was Ford, right? Let me do Ford real quick. Sorry, somebody asked about Ford, and you know, I was distracted by somebody who was promoting girls on our channel. Okay, Ford. Oh man, ooh, looks like a Head and Shoulders, doesn't it? But a weird one. It's slanted, kind of. It's slanted. It's kind of like this way. Neckline would mean that it's somewhere around here. This looks bearish temporarily. That means a potential opportunity to short all the way to around $12 or so on Ford. I think you want to wait for the break below 13.50, then short it all the way down to around 12 bucks. 12.50 would be a good strike to buy if that's an available strike. Sorry, old man Kev. I just saw the Ford, so I'm doing it for you now. Yeah, that would be the play. Alternatively, if you bounce here at $14, then the upside. So yeah, that's how you play Ford. Wait for the bounce of $14 to the upside, and that would also be a $14 scalp. Don't do upside with Ford. Here's one thing that you guys need to also keep in mind. If you're playing Ford, don't do out the money contracts. Do at the money or in the money contracts. You want to bank on delta and not gamma in stocks like these, which have low dollar value. Because remember, when a low dollar stock, like for example Ford, like it moves $1, you're not going to really benefit much from you know, the move in the dollar. So in other words, how do I, okay, so to make the comparison, look at Tesla, for example. If it moves multiple dollars in a day, but Ford only moves $1 to $2 in a day, right? You guys get that, the idea of that? So the delta stack is going to be $1 here versus Tesla would stack, let's say, 5 deltas in a day, right? So you want to beneficially capitalize on the one move delta, which is in the money, because that delta will be higher, rather than capitalize on gamma, because the gamma is going to be lower on a lower dollar stock. Okay, the volatility is lower. That's what I'm trying to say. Okay, so yeah, that's just my advice. Microsoft have been playing games. Thanks to you. No problem, Carlos and Glenn. Absolutely. And all right, well, I'm gonna hop into the Discord and trade with the team right now. I hope you guys have a great trading session. And thanks for tuning in, guys. I'll see you guys back on Monday with another pre-market live. And yeah, peace, guys. Have a great weekend, and see y'all. Bye.